Next, I just wanted to discuss one of the major components of a purchase contract today for you to win a bidding war, and that is appraisal gaps or appraisal guarantees. And sometimes this can sound really scary, so let's just talk about it. I want to teach you of how some different points here. So let's say you're looking at a home, and just know this. First off, homes are, like I said earlier, are often, almost always, listed for less than their true value. So let's say the home is listed at $499, and you're writing a contract, and maybe you have to go all the way up to say $550 or 10% over the list price. Okay, and the seller may demand you to offer an appraisal gap for the difference between the $550 price and the $499 list price. And you go, wow, oh my gosh, that's $51,000 I could, quote, lose? No, here's what you need to know. And this is where your realtor can really help you. She or he can go pull up comparable sales from the neighborhood of homes like the one you're buying and find out, okay, what are the homes sold for in the last 3 months? You may find out that the last 3 sales in this neighborhood or this area sold for $525, $530, $540, and they each were maybe in a little inferior condition or sold more than 3 months ago. Thus, the home may appraise at least at $540. So you may only have $10,000 potentially at risk. So the appraisal gap doesn't have to be so scary. Your realtor can be a huge source of help here by having them pull comparable sales for you. Know this, let's just say, for example, you're putting 25-30% down on a home. So let's use the price of $500,000. You're putting 25% down. That's $125,000. And your loan amount would then be $375, okay? Let's say the home only appraises at $480 and not the offer price of $500. What happens? Well, your loan amount stays the same at the $375, but your loan to value, which is calculated based off of the lesser of the appraised value or the sales price, now that puts your loan to value at about 78-79%, and nothing changes on your loan. You still have the same monthly payment. You still have the same amount of money to bring to closing as you expected, that $125,000. So there's very, very little danger or risk exposure for you. Next, how about clients who are putting less money down? Let's say on that $500,000 home, they're putting 10% down. Okay, so that's $50,000. Loan amount's $450. Let's say the home only appraises at $480 again. Okay, that's going to raise their loan to value from 90% to about 94%. What's going to happen? Well, the cost of their mortgage insurance increases. It may increase by $50-$60 a month. You don't need to bring extra money to closing. You'll just have a little larger payment because the mortgage insurance cost increases. But always realize you might be able to get rid of that mortgage insurance payment in just 2 or 3 years. So it's a short-term thing. So I have many clients this happens to. Everyone has said, okay, I'll pay the extra mortgage insurance. It's one of the most important parts of the contract is being able to offer an appraisal gap. So I hope today's video really helps you understand that maybe they're not quite so dangerous. But if you do have questions, please feel free to reach out to me here down below on my page, or just text me. You can text me at 303-881-6374. That's 303-881-6374. And I'd be happy to show the numbers to you and run numbers for you and help explain this to you even better. And so if you like this video, please share it and subscribe down below.